Hello everyone. So in today's lecture we will be starting with the questions on trading and P&L account from the chapter number 3, preparation of financial statements. So in the previous lecture we have covered the concepts related to how a P&L account is prepared, or we saw the specimen of a profit and loss account and what are the components of a trading account, that also we saw. So starting with the formation as to how a trading account is made, and then moving on to making a trading and P&L account or a profit and loss account separately. And then also we will be taking a look at how a profit and loss appropriation account is maintained. So starting with the question. So now here question number 1 says that following are the leisure balances which have been presented by Messrs. P. Sain as on 31st March 2013. So these are the particulars and this is the amount that has been given. So we have stocks, we have purchases, we have carriage inwards, then we have wages, freight. So all the nature, according to the nature of these items, we have to put them in the, so after going through the additional information that has been given, we have to draft the trading account. So as we can see, the components are related to the trading account of a particular company, as this is the opening stock we have been given, and then we have been given the purchases. So then these are the direct expenses, being carriage inwards, wages, freight, etc. Again, these since these are direct expenses related to the purchases of goods, so these will be included in the trading account itself. Now here we have sales, we have been given return inwards as well as return outwards. Then we have been given royalty on production and gas and fuel expenses. So, and in the additional information it has been said that stock as on 31st March 2000. So closing stock has not been given here in the details that we have seen above. So here we have been given the information on closing stock as to this is the market price, that is 24,000, and this is the cost price, that is 20,000. So as we all know, according to the convention principle as well as according to the accounting standard 2, we have to value the inventory or the closing stock in the books of account as lower of cost or NRV. So accordingly we will be solving and we will be mentioning the value of closing stock in the books of accounts. Here stock value rupees 10,000 was destroyed by fire and insurance company admitted the claim to the extent of 6,000. So the remaining 4,000 becomes the loss of the company, and accordingly we have to account for the same. Then goods purchased for rupees 6,000 but still lying in transit will be, and it has not been recorded in the books. So how such treatment of goods that are still lying in transit? So basically such goods have not yet been sold. They were supposed to be sold but they have not moved to the place of business or from the business owner's location to the person or to the customer to whom such goods have been sold. So basically such goods would still be regarded as the goods of the business. So we will be including such goods or adding such goods back to the purchases. Then we have goods that have been taken by the proprietor for his own use was rupees 3,000. We have outstanding wages amounting to rupees 4,000 and freight was paid in advance for rupees 1,000. So these are the additional information. Above is the particulars that or the components that are to be included in the trading and P&L account. So on the basis of this, we have to draft the trading account of Messrs. P. Sain as on 31st March 2013. So first we will be doing these adjustments that have been given to us related to the stock, closing stock valuation, then how the fire and insurance claim has to be recorded, then the goods purchased which are still lying in transit, how that have to be recorded, or how such goods need to be added back to the purchases, goods taken from the proprietor for his own use, how we have to show such goods in the books of account, and then outstanding wages adjustment, and as well as freight that has been paid in advance for rupees 1,000. So after doing all these adjustments, so we can do, so there are two ways of solving this question. Either we can do the adjustments separately as a working note and then put down the final values in the trading and P&L account, or we can make the adjustment in the trading and P&L itself and show that these goods have been adjusted otherwise, and then the final value has been recorded in the trading and P&L. So let us start solving the question. So starting with the solution, and in the books of Messrs. P Trading and P&L account. So however, we are mentioning it as trading and P&L account, but we are only drafting in this particular question as we have only been given the information related to trading account. So we are only drafting the trading account here. Debit, credit, particulars, and amount, particulars, amount. So you must be wondering that in this particular format, why are we not including the date? So as you all know that such trading and P&L account are prepared specifically at the end of the year. So for the year ended, so therefore it won't have different dates. That's why the date column is not included here, and we simply put down in once we write down the heading or give the heading trading and P&L account, and we simply put down for the year ending or ended 31st March 2013. So firstly, we have been given the opening stock. So here first and foremost would be the two opening stock, which amounts to 10,000. And then we have the purchases. So two purchases, and since the purchases that have been given to us is 1,60,000, and out of these 1,60,000 we have also been provided the return outward, as in the purchases that have been made would so we have purchase returns also, and such purchase returns is amounting to rupees 10,000. So less return. So since I have less space here, so I am using the short forms. However, while you are drafting your or solving your particular question, you do not have to use these short forms. So return outwards would amount to 10,000. This amounts to 1,50,000. Again, out of this 1,50,000, here we have also in the point number 4, as you see, the additional information point which says that goods have been taken by the proprietor for his own use. So such goods have been withdrawn by the proprietor, so that will be here also deducted as such goods have been taken. So we cannot include the same in the purchases because they have already been taken by the proprietor. So here less goods taken by the, so it is not a sale basically. Such goods have been withdrawn for the own use, so we will not be including that in the sales, but reducing or the amount of such goods from the purchases. So goods taken by proprietor amounting to 3,000, which brings us to the net 1,47,000, right? Again, we have also been given that goods that are still in transit, so purchased for 6,000 but are still lying in transit. So until and unless they are delivered or they have reached the destination, their final destination, the sale would not be determined. The recognition of revenue cannot be done as the goods are still lying in transit. So we cannot consider it as sale. So thus we would be adding such goods still lying in transit, goods in transit, and we'll be adding that back, worth rupees 6,000, coming, the total comes out as 1,51,000. Apart from that, do we have any other? So it is 1,47,000, 6,000 is 1,53,000, right? So here this will come out to be 1,53,000 being the purchases that we have to record Further, after the purchases, we have been given some expenses as to we have wages and carriage inwards we will be also accounting for. So to carriage inwards, which is carriage inwards is 10,000. So here we would be accounting for the same. Again, after carriage inwards, we have the wages, and wages amounting to 30,000. However, in the point number 5th, it has been said that outstanding wages amounted to rupees 4,000. So basically, along with the wages, that is 30,000, we still have, so expenses have been there. So such wages expenses have been recorded in the leisure balances. Apart from such leisure balance of the wages account, we also have outstanding wages amounting to rupees 4,000, which has not been accounted for in the leisure account, but we have this additional information available with us. So along with the 30,000, we would also be adding such outstanding wages amounting to 4,000, right? Such are the, yeah. So 34,000 would be the total here, which we will be accounting for in the trading account. After the wages, we have freight, which amounts to 8,000, and also in the last point, that is point number 6, it has been specified that freight was paid in advance for rupees 1,000. So out of this 8,000, 1,000 advance of a freight, so expense which is not belonging to this particular year, for that and it belongs to the next year, so payment of such expense has already been made, so we will be accounting for that particular expense in the next year, thus reducing such prepaid expense from the trading and P&L, which is the adjustment that we have to do. So along with the components as to what is the nature of the expense, whether that is a direct expense or whether that is an indirect expense. So direct expenses will be a part of the trading account, indirect expenses will be a part of the P&L account. So along with that, you will have to take care of how you have to treat the outstanding expenses or how you have to treat the prepaid expenses. So such are the adjustments that you will be doing while drafting such trading and P&L accounts, and this is what you have to practice while you are drafting such financial statements, because eventually the marks that would be assigned or the correct answer depends on your correct treatment of the adjustments in either the trading account or the P&L account, or for that matter balance sheet. Understood? So we will be doing questions, and apart from that you have to practice some more questions, and that is what will make you more conceptually strong, as well as otherwise also if you practice more and more, then the chances of doing or making mistakes in such questions. So what happens is when the questions are lengthy or when you have a lot of adjustments, so while solving you tend to do mistakes, but practicing more questions will kind of decrease that tendency of making any mistakes, because you will be sure of what you are doing, right? So continuing with the question, so we have now the freight. So to freight, so here we have freight expenses amounting to 8,000, and out of this 8,000, 1,000 is the prepaid expense, so less prepaid freight expense, which is 1,000. So this is an addition, those are the ones which we have subtracted. So this amounts to again net 7,000. And also, so return outward we have accounted for, and then we have the royalty on production and then gas and fuel expenses. So because it has been already mentioned that royalty on production, so since it is on production, so thus royalty and production expenses would be the direct expenses. Again, gas and fuel would have been spent while production of such goods, so these being the direct expenses, so we will be recording them as an expense, as a direct expense in the trading account. So to royalty on production, which is 6,000. Again, 2 gas and fuel expenses amounting to 2,000. And then we have, so we have accounted for almost, we have recorded stock purchase, carriage inwards, wages, freight, sales, and return inward we will be accounting for on the credit side. Again, stock we have to account for on the credit side of the P&L. So along with that, now we have also been given that the stock valued has been destroyed by fire and insurance company has admitted the claim. So now insurance expenses is not the direct expense that would have to be mentioned in the trading account. So we will not be recording such expenses in the trading account, as we will be, because it is an indirect expense, so we would be accounting for the same in the P&L account instead of the trading account. So the insurance claim expense will not be recorded here. Now moving on to the sales part. So here by sales, so the amount that has been given to us is 3 lakhs, out of which we would be deducting the return inward, which is 16,000. So 3 lakh minus 16,000 amounting to, just a second please, 3,60,000. 3 lakh minus 16,000. 3 lakh minus 16,000 comes out to be 2,84,000. And also the goods that we have added in the purchases, so that would be a part of stock apart from, so this would be the net expense. So since, so 2,84,000 being the sales that have been done for the year ended 31st March 2003, and coming to the closing stock. So by closing stock and the value that we have been given, so market price is 24,000 and cost price is 20,000. So market price, we will be treating this particular market price as the net realizable value, so lower of cost or net realizable value. So therefore we will be taking the value here as 20,000. Plus, along with this 20,000, we will also be adding the goods that are still lying in transit, because we have included them in the purchases, and since it is not part of the sales, so they will be recorded in the closing stock. And why we are adding them back to the purchases, as in the question or in the point it has been mentioned that such goods have been not at all recorded in the books. So therefore, we have to record for it in the purchases as well as in the closing stock. So adding goods in transit, which is amounting to 6,000. So the total will be 26,000. And also here, since the goods that have been destroyed and the loss of stock and the insurance company claim, we will be accounting for in the profit and loss account. So here we will be adding that those particular goods that have been destroyed in fire and including them in the closing stock, so that the net of the expenses can be recorded in the P&L account. And in order to bring the correct gross profit or the gross loss, we have to first record such goods that have been destroyed in fire and add them back to the closing stock destroyed, because we will be accounting for the same and treating such expenses in the profit and loss account. So for the time being here, in order to determine the correct gross profit, we will be adding back the stock that has been destroyed. So this amounts to 36,000 and putting the same here. So let us take a total. So 2,84,000 plus 36,000 gives us 3,20,000, and let me just record it here first. This is the total of the credit side, which is 3,20,000. So let us take a look at the total of the debit side, and the debit side total is 10,000 plus 1,53,000. Then we have 10,000 once again, 34,000 plus 10,000 plus 34,000, then plus 7,000 plus 6,000 and plus 2,000 minus 3,20,000 will give us 98,000 to be the gross profit of gross profit, which will be 98,000 and thus transferred to the P&L account, transferred to profit and loss account. And this also will give us the total of 3,20,000. So this is the trading account that we have to maintain. And now, as I told you at the beginning of the solution only, that either we can choose to make or write down the solution like this, wherein we have shown the adjustment in the P&L account itself, in the trading account itself. Also, if you think that you do not want to make the adjustments in the trading account and you want to separately draft the working notes first, do such adjustments that we have done here, like in this case. So we could have made, so opening stock we didn't make any adjustment, so we could have just put down the figure here as it has been given in the question. Here in the purchases, such adjustments as we have done it here directly in the trading account, we could have drafted a working note 1 and then quoted such working note 1 in the trading and P&L account. Again, carriage inwards, we have simply put down the value. So for wages, for freight, we could have made the working notes and give the reference of the working note here and simply put down the values. So likewise, in the case of closing stock and sales, we could have made separate working notes and put down the final values here. So these are just two ways of presenting. In whichever way you are comfortable, the idea is that the examiner should be able to understand that you knew the question and you have solved it properly and the solution is correct, as well as the way of presenting that particular question is correct. So now let us take a look at another question. So here we have question number 2 that says, so question number 2, from the following particulars presented by Shri Tirlankar for the year ended 31st March, prepare profit and loss account. So we have to, so earlier in the first question we prepared the trading account, and in this particular question we have to prepare the profit and loss account. So gross profit has already been given in the question, so we need not draw the trading account. So the gross profit is given, then we have the rental expenses, then we have the salary, commission expense, insurance, interest. So it has been credit, so interest is the income, so it could be interest paid also, so that's why it has been specifically mentioned that since it is a credit, so that means it is an income of the company. We have bad debts, we also have provision for bad debts, which is 4,000. Then we have sundry debtors, then we have discount received and plant and machinery. Further, we have been given this additional information regarding the adjustments that is needed to be done in the trading account. So the adjustment says, firstly, outstanding salaries are there. So as I said, that along with the specifications and deciding on the components that are to be part of a trading account or a P&L account, we also have to take care of how we have to treat the outstanding salaries. Here rent has been paid for 11 months. The outstanding salaries amounting to rupees 4,000. We have to account for the same. Interest is due, but it has not been received, amounting to rupees 2,000. We have prepaid insurance. Depreciation is to be provided. So we have been given the value of plant and machinery. On this, we have to provide depreciation expense by 10%. Further, bad debts amounting to bad debts amounted to rupees 2000, and we have to make a provision for bad debts at rupees 5% at 5% on sundry debtors. So accordingly we will have to see that whether we have to create a provision or we have to credit such provision in the P&L account. Then we have commissions received in advance that amounted to rupees 2000. So on the basis of these informations and the component of or the expenses given in the P&L or given in the question, we have to draft the P&L account. So let us start solving the P&L account. So starting with the solution here and drafting the trading in P&L, or we can write profit and loss account for in the books of Shri Tilhankar for the year ended 31st March 2013, debit, then credit, particulars, the amount, again particulars, and the amount. So looking at the very first expense that has been given to us, so we have the gross profit, so we will be transferring the gross profit here first at the credit side. So by trading account, gross profit that amounts to gross profit amounting to 1 lakh, right? Then we have the rent, so here we will be writing the rent, so to rent account, and the rent is 22,000, and this 22,000 is for 11 months. So we will be providing for the 12th month also, since because we would be preparing the profit and loss account at the end of the year, so we will have to add the outstanding rent as well. And how will we determine the outstanding rent? So this 22,000 is for 11 months. So 22,000 divided by 11 is 2,000 per month. So since we have not provided the rent for 1 month, so we will be adding the outstanding rest for that particular month, which is 2,000. And how we have derived? So 22,000 divided, because 22,000 is for 11 months. So per month we have ascertained by dividing 22,000 with 11, so per month it is 2,000, and adding such rent, and the total being 24,000, which will be recorded here. Again, the next expense which comes out as the salaries, and for salaries also in the adjustment 1, as we have been given that outstanding salaries amounted to rupees 4,000. So first we will mention 2 salaries, and then salaries amounting to 10,000 plus the outstanding salary. So 10,000 here, adding the outstanding salaries amounting to 4,000. So the total comes out to be 14,000. Further, we have been given in the question after that commission, which is a credit. So we will be taking it on the credit side and recording commission. So by commission received, amounting to commission, which is 12,000. And with so as it is written credit, so that's how we come to know that it is an income for the business. And had it been written that commission paid, so it would become the expense, which would be recorded on the debit side of the P&L account. Again, the insurance expense has been given to us, so to insurance, which amounts to 8,000. Apart from that, we have been given, so we have also been given prepaid insurance. So the insurance amounting to 8,000, and from that we have a prepaid insurance. That means insurance which has been paid in advance and does not belong to this particular period. So we would be reducing such prepaid insurance from the insurance amount, and that is 2000. So prepaid expense or the insurance expense that is to be recorded in the P&L will be 6000. After that we have given interest credited, so we will be amounting for such interest credit. Okay, so in the commission received, we also have one of the adjustment that has specifically mentioned that commission has been received in advance. So since the commission is received in advance amounting to rupees 2000, and such commission does not belong to this particular year, therefore we will be reducing that commission also from the P&L account. So here 12,000, from the 12,000 we will be reducing the commission received in advance amounting to 2000. So thus the commission that is to be recorded, or the income that needs to be recorded in this particular year, is 10,000 in terms of the commission that has been received. Further, the interest which has been received by the business, so interest received has been given as, so interest received amount is 6000. And in the point number 3 of the adjustments, it has been shown that interest due but not received amounted to rupees 2000. So as we all know, with the accrual, we will recognize all the incomes in the books of accounts. So we would be recognizing this particular revenue also in the books of accounts, and with the interest that has been received, we will be adding the accrued interest as all the the income that has been either if it has been due but not received, since still it will become a part of the incomes for the business and thus accounted for and recorded in the profit and loss account. So here we will be adding the interest amount, and thus the total comes for the interest amount as 8000. Now we have recorded for the interest amount. Then we have the bad debts, provision for bad debts. So we also have discount received. So this discount received also becomes the income and thus will be recorded on the credit side. So by discount received amounting to 2000. And on the credit side, we will be giving the effect of the provision. So let us first record the bad debts here. So bad debts, so 2 bad debts. The bad debts account. So here for bad debts, it has been mentioned 2000 is the account, and provision for bad debts is 4000. So bad debts being 2000, and again in the adjustments that have been given. So point number F says further bad debts amounted to rupees 2000. So that we will be adding in the bad debts account. So further bad debts amounting to rupees 2000 would be added here. So this total, and along with that we have to make a provision for bad debts at 5% on sundry debtors. So let us first see. So we have the sundry debtors amounting to rupees. Sundry debtors have been given to us as 40,000, on which the provision for bad debts would be subtracted. So 40,000 minus 2,000, and on this particular 38,000, we would be creating the provision for bad debts at 5%. So 38,000 into 5% amounting to 1900. Right, so now the provision for bad debts that we have been given is 4,000. That is the opening balance is opening balance of provision for bad debts is 4,000. And the amount that needs to be carried forward to the next year is 1,900, so which is less than the opening balance. So therefore we will be creating, or we will be crediting the P&L account with the difference, which amounts to 4,000 minus 1,900, which is 2,100. So we would be crediting profit and loss account with the amount 4,000 minus 1,900, as we need to carry this particular provision into the next accounting year. So this amounts to 2,100. So thus we would be accordingly. So this you can show as a working note and then refer to this particular working note in your P&L account. However, we can still, so here since we have recorded 4,000 here, and here we can show, so by provision for bad debts, so the opening balance is 4,000 less the provision created, or provision or we can write down provision, new provision created at 5%, which amounts to, so how we have calculated, you can refer working note 1 and mention simply the amount here, which is 1,900. So thus the balance of this would be recorded and credited to the profit and loss account, which amounts to 2,100. That would be accounted for here. All right, so this 2,100, and after this we have to, so we have provided for the provision for bad debts, we have recorded the discount received. In the adjustments we have adjusted outstanding salaries, rent, outstanding rent, then taken care of the accrued interest, prepaid also. So we have to now provide the depreciation on plant and machinery. So here we will write down to depreciation, and depreciation rate we have been given, and which is on plant and machinery. So plant and machinery account for 80,000, on which we have to provide 10%. So 10% on 80,000 amounts to 8,000. Right, so this is the 10%, and on per annum basis we will be, so this particular depreciation can be modified also, that they can give in the question that this depreciation, so here we are calculating it annually, so how they can make a change in this particular adjustment is that they can show that plant and machinery was acquired in this particular year, and you would have to then calculate proportionate depreciation as the machinery was purchased during the year, and depending upon in which month the machinery was taken and procured by the business, accordingly the depreciation amount would be calculated. Here we have calculated direct interest annual depreciation, so 10% on 80,000 will be 8,000. So let us now calculate the total amount. So as we can see, it looks like that the credit side would be more, and we will have a profit only here. So let us just ascertain first the total of the credit side. So 1 lakh plus 10,000 plus 8,000 plus 2,000 plus 2,100, amounting to the total being 1,22,100. And here let us see, by reducing all the expenses from the total, so we will have minus 8,000, minus 4,000, minus 6,000, minus 14,000, minus 24,000. That's it, yeah, minus 24,000. So we have the profit for the year ending 31st March 2013, which amounts to, so 2, and such account or such profit is transferred to the capital account of the business owner. So to capital account, or if it has been given that such capital or such profit needs to be transferred to the reserve account, so then we will transfer it to the, ideally the profits are transferred to the owner's account, so we will be transferring it to capital account and mentioning profit earned during the year. So this is the working note, right? And here the profit and loss is ending. So profit and loss, profit earned during the year amounting to 66,100, which brings us to the total of 1,22,100. So this is how we will be preparing the profit and loss account of a particular business entity, right? So now we would be continuing with the next questions, with the other questions in the next lecture. So till then you can, make these questions and solve these questions fairly in your registers. Also, along with that, if you want, you can practice more of such questions so that you get a hold of the concept and understand more how to solve the adjustments. And if there are some more tricky adjustments, try to solve them by your own, because that will increase your confidence in terms of solving a question on your own and thus help you in scoring good marks in your paper. Or we can just say that, it will prepare you and make you ready for appearance in the exam. So see you all in the next lecture. Take care.